right, so this is just a breakdown of the Euro USD trade I took today. All right. Now, starting from the daily time frame. All right. Now, this was how the daily time frame was. Or I actually use the replay future. So now we had this on the daily time frame. Okay. Now, if you check from the daily time frame, let's look at structure as a whole. Okay. Let's look at structure as a whole. This is where you get to actually get your daily buyers from. All right. Now, looking at structure generally, or having an overview of the daily structure, you would see, all right, that price did what? Took out this low. You see that price actually took out this low, all right? Now, let us assume, okay, maybe you don't really know. Price took out the low, yes, what next? And you're confused, okay? Now, you are a day trader, you are not like a swing trader, or you are not a swing trader, so you do not really have so much concerns with with being 100% accurate with what the daily time frame is saying. You just want to have an idea of what the daily time frame is saying. All right. Now, looking at this structure, okay, price took out sell side liquidity. We have this area, okay, over here. Now, you might even want to say here's an inducement. And if here's an inducement, it means you anticipate that price will buy. All right. Now, I'm not saying you're wrong. Or I'm not saying what I just said now is wrong. All right. But now, we are day traders, or rather, I am a day trader, you're a day trader, and you're not a swing trader, because if you get in this course, then you're most likely a day trader. Everybody I mentor is a day trader. Nobody actually swings yet. All right. So now looking at the previous close of daily time frame. All right. Now look at this candlestick. Look at this candlestick. All right. Let me play so you see how this candlestick actually closed. All right. You see how the candlestick actually closed. It closed as what? As an indecision candlestick. If I use maybe another chart like Owando, you actually see that it closed as a rejection candlestick. All right. I was using Owando for the analysis. I only put forex.com. All right. I only use forex.com so I can actually have a clear chart to teach. Okay. So now the previous candlestick closed as what? An indecision or a rejection candlestick. All right. Like I said, you see that on Owando. For those that might not know what Owando is, let me show you guys. Let me not assume you will know. So let me show you. Now, when you want to view Euro, USD, or any other trading index, all right, there are lots of brokers that can show you different charts, all right? So all of these are Euro, USD, and we have different brokers that can offer to show you the chart of Euro, USD. We have FXCM, we have Wanda. We have forex.com, we have us, we have Pepperstone, we have 8cap, we have Capital.com, we have Saxo, Black Bull, and so on. All right. So I was using this one initially. I'm only using forex.com for teaching purposes right now. All right. Now we have an idea. Okay, the daily candlestick closed as an indecision candlestick, meaning that the buyers are weak and we'll most likely see the sellers come in play anytime soon. Okay, so let's go down to the H4 and have a more detailed understanding of what the chart is saying. All right. Now, coming out to the H4, we can see something really, really interesting. And what is that? We have buy-side liquidity taking. All right? Buy-side liquidity taking on the H4. Now, look closely, all right? Something actually caught my attention. What we have on the H4, okay, is not a market structure shift. Neither is it a break of structure. It is what? A sweep of liquidity, okay? It's a sweep of liquidity. If it was going to be a market structure shift, we want to see the body close above the high. All right, we want to see the body close above this high. But then it instead went above the high with a week. All right. So it means this week took out stop losses over here. It just swept liquidity. Now, when things like this happen, in most cases, you will see price sell crazily. All right. But then if maybe you had I'm looking for a tool. If maybe, all right, we had price close above previous high, all right, we could just see something like this and then price would start buying, all right. But then since we have a sweep, all right, since we have a liquidity sweep, all right, price just did what? Took out sellers and will keep on selling in most cases. All right. So when I saw the sweep, I knew that okay, we are what? We are bearish. All right, we are bearish. Now look at something really interesting right here. After we took out buy side liquidity, all right, price formed a fair value gap over here. All right, price formed the fair value gap over here, and then price was trading below the fair value gap at that point. All right, so the thing right here is that I knew that okay, at this point I need to catch a continuation. Okay, and then before you catch a continuation, you want to see a retracement happen. Now, when that retracement happens, where do I have as my zone or point of interest that I will look for entries when price gets to? All right, now that is where this fair value gap comes in place. This is a point of interest. This is where I will consider sell entries. All right, so as price is selling below here, all right, as price is selling below the fair value gap, if at all I have price come back to this fair value gap, I will look for selling opportunities. All right, as simple as that. So that was what I had initially. Okay, then I was conscious of this, and then I followed price on my 1 hour time frame. Okay, my 1 hour stroke 15 minutes time frame. I followed price on from there. All right, now for the sake of this class, we might not really, or you might not really get to see full information on the 1 hour. So I'm going to be using the 15 minutes. All right. In short, in most cases, personally, I use the 15 minutes. All right. Now, I was concerned, okay, about this fair value gap. Don't forget, here is the fair value gap on the 4 hour time frame. Now, something also interesting, but then let us play. All right. Let us see how the market actually was going. So you can see price kept selling. All right. Now at this point, price took out this low over here. So price taking out this low means that this point right here is what? Is an internal high, and it's liquidity line above it. All right. I've taught you guys about liquidity. Okay. So now you must understand that okay, liquidity lies above this high. So what does it mean? We have what is called confluence. All right. If we have liquidity line above this high, then it makes sense if we expect price to sell from what? From this fair value gap over here. Because it means price is also grabbing buy side liquidity, and price is also in H4 fair value gap. So it is confluence, or it is confluence means when you have a lot of things telling you the same thing. All right. So in this particular scenario, or what we're talking about right now, we have what? The fair value gap telling us that okay, we'll most likely go for a sell, and then we have internal liquidity. Okay, so these are two things telling us that we'll most likely have a sell from around this region. Oh, they are giving us reasons to go for a sell from around this region. All right. So when I saw this, I was okay, like nice. And then I kept on watching price. Okay, so I basically did not do anything. I was only waiting for price to get back here. All right, to get back into the zone. All right. So let us see. Let us see what happened. Price kept on doing its thing. Okay, kept on waiting, and price was just doing its thing. Now, let me take this back a little. Now, this is something really amazing right here. Okay, price took out this liquidity as expected, and then what do you have at this point? Okay, an inducement. I taught you guys inducement. All right. Now, this is an inducement to this transactional week over here. All right. So this inducement is what is closer to this point of interest. So two ways you could have entered this, or two ways I could have entered this, but I used the second entry, and I'm going to tell you why. All right. Now, I could have just placed my entry at the inducement over here, and I could have just put my stop loss few pips above this high over here. All right. Now, I could have just used the inducement as an entry. But then something happened on the 3 minutes time frame. Now, I was a bit skeptical because of these huge candlesticks. All right. The displacement was quite something of concern. All right. And if you check, this structure here was also something of concern. Price, the bears were a bit weak, and then boom, the bull just coming and no. So I was a bit skeptical. Then I had to go down to my my 3 minutes time frame to look for confirmations. I've taught you guys about confirmations and how you can actually get confirmations when we want to see possibly buy side liquidity taking. Then we majorly want to see a market structure shift and then a fair price returning back to fair value gap, and then we sell from the fair value gap. All right. So that was what I was looking for on this 3 minutes time frame. All right. But don't forget, you could have also used your inducement as an entry. But then looking for more confirmations, let us see the M3 pattern. All right. So now I'm going to actually play this and then we'll follow up. Now notice what the M3 is doing. Notice what the M3 is doing. The M3 has already given us an entry, but then let me take this back a little. All right. And I'm going to show you on M1 so you'll be able to see it clearly. Now you can see how we came from the daily time frame to the 1 minute time frame. All right. Now, what is actually going on here? All right. At this point, we have what? A market structure shift here. We have a market structure shift here. And then if you check, we have our fair value gap up. Where's our fair value gap? I want to actually, yeah, good. We have our fair value gap here. So at this point now, I have a more precise entry. So seeing this, okay, seeing this, what do? I'm just going to take my short position right here. Oh, what the hell is this? All right, I'm going to take my short position right here. Entry here, stop loss above this high, all right, and then take profit. I'm going to target this low that formed right here, all right. I'm going to target this low that formed right here, all right. So let us see how this price actually played out. Okay. This is actually a trade I took today. Those people that were in the mentorship group as of the time of recording this video, I sent the analysis, the before and the after, and how price or how price moved on this signal. All right. So let us see. All right. So price moved, and then sorry. The entry is on the fair value gap. This messed up something. So the entry is going to be on the fair value gap, just like I've always been teaching you guys. All right. So you can see it triggered our entry. Don't forget, our take profit is here at this high. I'll personally love split at this high. All right. Because liquidity lies below this high, or maybe you can want to put it few pips below the high, but then sometimes price might not go as perfect as that. So just our advice, you just put it on the high. All right. Or before the high, even in most cases. Sometimes I close my trades even when it's just very close to the high. I'm just going to close out. All right. So we're going to keep watching and we'll see how price played out. All right. So price triggered and then it kept moving, and then of course price hit what? Take profit. All right. And then the amazing thing about this is price even kept selling. It respected the daily buyers. All right. Price kept selling. All right. So now this is basically how you do your analysis. All right. I'm actually just dropping this video because I want to teach you guys I want to show you guys how I actually took that trade. All right. So well, I think we're gonna call it the end of the video here. So I'll see you in my next video. It's King and I'm signing out.